This is going to be take two of the pre-market analysis because take one, unfortunately, the voiceover or audio recording got deleted unintentionally. Nah, not even the company or like software I'm using just deleted itself. So it's great fun. Yeah, so we're on TradingView, not Top Step today. Just thought it'd be cleaner so that I can actually show you guys SMT. What I'm referring to, we're going to go down to the hourly, same as last week or the prior week. I'm not going to go any lower than that because I think you kind of need new market information. But yeah, just off rip, I want to give you guys a little example. Just where price is right now in relation to previously. This is kind of good that I have to redo it because the first one wasn't scripted. This one is neither. But at least this will be formatted nicely because I've already done it once. So just taking a look at where we are now versus where we are like 2 years ago or a year and a half ago. So 2024 December high. So here we had this like rejection block sort of thing on the weekly, damage in the bottom half. We inverse this gap, went up, retested final reaccumulation in extreme premium of this swing. When I say extreme premium, I just mean that range this line represents premium and discount. Anything above is premium. When I say extreme premium, if I draw up this fib and go to probability quadrants, you can see we went into the top 0.25 range, okay? So yeah, exact same over here. Take that and copy that from this high to low. We have inversion fair value gap, trade up into this rejection block, damage in the bottom half, so the retest, which is most of the time accumulation, manipulation, then distribution. I'm sure if I draw up my, well, there it is, my projection standard deviation tool, where are we at? You can see, yeah, we trade to force, so an overextension of price, and then we look to trade in the opposite direction, which as well, the standard deviation projection off of this distribution projection. Yeah, you can see we made just over a perfect swing, and that's when we started to reaccumulate. But yeah, so just looking at this price action, we have an SMT from this high with ES to there. So we have a yearly SMT, this being last year's October high or last year's high. So far we have accumulation, could be potential manipulation, could be potential manipulation here, just because we do have this this weekly SMT off this low. Inside of this Suswick, where this big gap was in this old FEGs. Now, I'm not going to say too much regarding the like politics side of things that occurred. But I will say that probably is going to have an impact on the charts. I wouldn't be surprised if we get some form of like manipulation leg first, but sentiment may drive price here, but smart money may do something a bit strange first, like some form of manipulation or fake out, rego, take liquidity, and then do something. But yeah, we'll see. So we've traded into this rejection block. We're in extreme premium. We've rejected with this daily ICT order block. We then go up and put in a weekly SMT off this high for ES inside of a weekly rejection block. So we have this weekly here, weekly bearish SMT. I'll write it all down. Yearly bearish SMT, not yet in. Like obviously the monthly is in, but the yearly is not in. I know that. Just gonna write RB. All-time highs. And yeah, just noting as well, we have clean daily low resistance liquidity up until we get into this BISI. For people as well that don't understand what BISI and CIBI means, BISI is a buy-side imbalance, sell-side inefficiency. A CIBI is the inverse. A CIBI is sell-side imbalance, buy-side inefficiency. They're just bullish fair value gaps and bearish fair value gaps. Fancy name for them. It's like their real terminology for what they are. Right, so it's pretty interesting that this is back inside this range, in my opinion. So that could act as our main draw. But again, this is a premium BISI. So in my opinion, it's still not where I want to see. I want to see this range low get taken. So this unfilled gap, pretty sus. Discount BISI, discount. Yeah. Just do that. Doesn't really matter where we are right now. But yeah, so we have this weekly SMT. We can assume the prior week low is going to get taken before prior week high. Pretty simple. Prior week low gets taken, we'll assume that this LRL resting lower gets taken as well. All right, so seen enough on the weekly. Let's drop down to the daily time frame. Just use ES. I'm going to drag this over because ES is now not as necessary. All right, one other thing to note on the weekly time frame, we're trading inside this wick. We are also 3 weeks worth of consolidation. Yes, we've taken the intra-week low here and then gone up and taken both intra-week highs, intra-monthly highs. We've closed bearish prior day, so my expectation following 3 days worth of accumulation is that either we'll continue to accumulate and bearish consolidation at that, so taking these lows, and if we take this low, then we can maybe take whatever high we put in, but I'd like to see bearish consolidation or bearish expansion. All right, let's see if the daily aligns with this, and we're just going to go down the time frame to the 1 hour and keep seeing if this aligns. That's my higher time frame bias. I want to now see if the lower time frames are confirming that. So just the first thing that I notice, again, my eyes draw towards the suspension block. You can see we've mohawked it here, as ICT would call it. The second thing my eyes are drawn to is this consolidation range. It's obviously that range with the wicks as well, but much more clearly defined with the bodies. So this consolidation range, why I say this consolidation, because this is then clean manipulation. How is this manipulation? How do I confirm manipulation? I confirm it with an SMT. So if we've accumulated, we've now manipulated, and it looks like we've displaced back into the range, I can assume that we're going to have some form of distribution. Now, if this is my low time frame model, I'd be trading internal range to external range. So where is external range? That is this range down below. Now, primarily these two, one because external is anything of this swing or this swing low to that swing high, but this is like, that's more than enough handles. That's like ridiculous. Again, that's if it's my low time frame model. I'm not necessarily saying that that's going to play out, but again, last time we saw accumulation, manipulation, we had the same thing. We didn't take this high. Sorry, we didn't take this low, but it's LRL now. We did go do the, I'm not going to mention this, but yeah. Old liquidity sweep, new liquidity may not be pulled at this high. It's more likely, if it's like this, it will have been trailed. So old liquidity, where prominent old liquidity is, may get the retest. But yeah, so accumulation, manipulation. Let's see if the lower time frame from this is confirming that. Let's first just mark out previous day high. Sorry, previous day low and previous day high. Also, people have been asking like, why I don't just have stuff like preset. I do on some things. I don't really use it. Prefer to draw it up. I don't know. It just feels like my brain recognizes it more once I've drawn it up. But yeah, so previous day high, previous day low, pretty significant ones. Again, I want to see previous day low get traded to, or previous week low. So almost want to see that be our primary draw, especially with the weekly SMT off the high. Now it doesn't. I'm not saying that we can't like take previous day high and then look to take these lows. I think that's more than possible. I think it's more than probable as well to go sweep some form of buy side. It's just not necessary though. So it's probable, but not necessary. So don't need to overforce our bias on that. So now dropping down to the 4-hour time frame. Let's get rid of the indicators. All right, dropping down to the 4-hour. You can see we had this very clean original consolidation. If you don't know what an original consolidation is, go learn your market maker models. So original consolidation, we go sweep this high. On ES, it's low resistance liquidity. We have accumulation. It's pretty interesting. We have accumulation, manipulation, distribution to go sweep this high. On a higher time frame, that's accumulation, that's manipulation. And this down below is distribution. So what we've done here is we've left these unfilled hourly fair value gaps and created what I would call this range, at least the like in between portion here, to be a balanced price range. All right. So we have these two ranges. You have, okay, one other thing actually I forgot to mention, which is very important. Why does this SMT so important? From swing high to swing low that we've been trapped in, this is a premium SMT. That's important. Premium SMT, premium manipulation leg. Smart money definitely entered shorts there. And now look what's happened over the weekend. We're probably going to gap lower. Not leaving retail to get an entry. It's a whole nother game. So the 4-hour, we can see we have a 4-hour SMT from this high to this high. That means that this balanced price range doesn't necessarily need to get traded into. I still think it's likely. I want to see it occur. We have two up close 4-hourly candles. I want to see it occur, but the likelihood is just it's not as probable, especially what's happened over the weekend. If we do get that, great. Even if we get another retrace all the way up and then come back down, that'd be nice. But ill probable. With this sort of aggressive reprice, I'd almost expect some form of distribution immediately, just because that looks like a final liquidity sweep. Huge SMT, inversions. Final like confirmation for me would almost just be like getting speed and distance through here. What I mean by speed and distance would just be like one big candle closing through all of it. Then you could kind of expect like the same thing, speed and distance. It's all low resistance liquidity, so it kind of makes a lot of sense. So yeah. So the 4 hours confirming the same theory that we have this displacement, we have these unfilled fair value gaps which you could trade into, but in my opinion would likely respect. And then, yeah, I'd almost want to see an SMT. An SMT would just be so much nicer. Daily SMT of previous day high. That would be optimal. Or some form of inversion down here, final run, and just take everything. Hourly is pretty much looking the same. Accumulation, manipulation. We just came back into the range. I just call that a retracement for more liquidity. I wouldn't say this is necessarily manipulation. I'd also say that's like start of distribution, but not enough liquidity. Retrace for more, and then go. But yeah, that's probably enough. You guys should have a pretty good idea or understanding of what we're looking at and why we're looking at it. So yeah, we're gonna call it there.